we solve an overstatement by writing it off on the opposite side. So remember, when sales are increasing, we credit. So if it was overstated, meaning it was put on the credit side, so we solve an overstatement by writing it on the opposite side, which is the debit side. Yeah. Then we solve an understatement by adding the understated figure on the same side. On the same side. So if sales were understated by a certain amount, we would have added that same figure on the credit side. So for an understatement, we just add on that same side, but for an overstatement, you write it off on the opposite side. So here it was overstated, meaning it was credited in the sales account. So here we are going to write it off on the opposite side. So we shall come here and write sales account. We are going to debit it. So we are going to debit it by 70,000, since it was overstated by 70,000. And we said an overstatement is an error that can be detected by the suspense account, by the trail balance. So we are going to record it in the suspense account. Suspense account. So after debiting the sales account, we shall credit the suspense account by the same figure, which is 70. So that's the first error. Then the second one is insurance is understated. Insurance is an expense. Insurance is an expense, and expenses increase by insurance is an expense and expenses increase by debiting. Yeah, but it was understated. It was understated. So we said the next error we have is insurance undercost. Insurance is an expense. Expenses increase by debiting. So it was understated. The debit side was understated by 40,000. So we said if we are solving an understatement, we add the understated figure on the same side, meaning we are going to go to the insurance account on the same side, which is the debit side, and we put the 40,000. And we said an understatement can be detected by the trail balance, meaning we are going to be recording it in the suspense account. So we shall come here and write B. So insurance $40,000 on the debit side, then suspense account same figure, which is 40,000, like that. Then C, cash of 50,000 received from a debtor but only recorded in the cash book. So this is an error of single entry. And we said an error of single entry can be detected by the trail balance, meaning that it is also going to appear in our suspense account. So cash of 50,000 received from a debtor but only recorded in the cash book. Yeah, when cash is received from the debtor, we always credit the debtor's account. So meaning we are going to credit the debtor's account and then we debit the suspense account. So see, suspense account, we debit it by 50,000. Then the debtor's account, we credit it by 50,000. Then a credit purchase of 59,000 was entered in the books as 95,000. So this is a transposition error. Transposition error. And this error cannot be detected by the trail balance, meaning it's not going to appear in the suspense account. The only thing we are going to do with it is do the double entry for it, a credit purchase. So what happens when a credit purchase is made? When a credit purchase is made, we always credit the creditor's account and then we debit the purchaser's account. So when we are correcting the error, we do the opposite. Yeah, with the difference between the two. So 95,000 minus 59,000 is 36,000. So with the difference. So D, the creditor's account, then the purchaser's account, like that. So after that, both sides are supposed to balance. So the question requires us to show the necessary entries to correct the error, then prepare the suspense account and then the statement of adjusted profits. So those are the necessary entries, then we prepare the suspense account. So debit and then credit. So we are going to get what to put in the suspense account from here. The first one, we credited the suspense account. So we shall come under the suspense account and write sales. It was 70,000. Then the second one, we still credited the suspense account. So we write insurance, 40,000. The third one, we debited the suspense account. So we come here and write debtors, 50,000. Then this one, it has nothing to do with the suspense account. So these are the only things that we record in the suspense account, then we balance. So this plus this, it is 110. So this side is greater than this side, so we write 110 here too. So this minus that, we get the balance. Balance carried down which is this minus that, it is 60,000. Yeah, like that. So that is our suspense account. Then they also want us to prepare the statement of adjusted profits. So let's prepare the adjusted profit statement. So before we do the actual thing, I have to tell you something. So here, the adjusted profit statement, this is the formula that can help you. So if something was supposed to be subtracted in the income statement, and it was understated, you add it. Sorry, you subtract it in the adjusted statement. Okay, an expense. So the opposite becomes true. So if something was supposed to be subtracted in the income statement and it was understated, you subtract it in the adjusted statement. Then if something was supposed to be subtracted and it was overstated, so if it was overstated, aka an expense, you add it in the adjusted statement. You get what I mean? Yeah. Then if something was supposed to be added and it was understated, you add it in the adjusted statement. Then if overstated, subtract it in the adjusted statement. If you understand what I wrote here, preparing the adjusted statement will be so easy. So let's prepare the adjusted statement for Chitoko Limited. We already start with the net profit. that they gave us in the question. So the net profit is here, 1.6. So 1.6 is here. So sales were overstated. Insurance was understated. Cash received from the debtors, this was a single entry thing, so there was no an understatement or overstatement. Then this, purchases were understated. So how are we going to deal with this? So we are going to add purchases were overstated. A credit purchase of this was recorded as this, so there was an overstatement. And remember, purchases are always put under cost of sales, and we always subtract cost of sales. So it's what I told you here. If something is supposed to be subtracted and it was understated, you subtract it. But then if it was overstated, you add it. So this purchase was overstated, so we are going to add it. So we add the purchases, 36,000. Then the sales were overstated by 70,000. They were overstated. Remember, sales are always added. So we said if something is supposed to be added and it was under, sales are always added, and they were overstated. They were overstated, meaning we are going to subtract them. So we deduct. We have sales of 70,000. Like that. Then we have insurance of 40,000. It was understated. Insurance is an expense and it is always subtracted. And we said if something is supposed to be subtracted in the income statement and it was understated, you subtract it in the adjusted statement. So we are going to come here and write insurance 40,000, like that. So this plus this minus this, what we get will be the adjusted profit. It's going to be 1526. Yeah, so that is how we prepare the adjusted statement.